Everyone, here we are with ticker symbol TSLA, Tesla Inc. And before we jump into this chart, I do want to say some things. And the first thing is welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. To all my subscribers, welcome back, and let's jump into this chart. So Tesla has had a bearish run, but from that bearish run, obviously it has had a recovery. But if we zoom out, right, it has had a worse bearish run than where we're at now. So a lot of investors, if you just look back 1 week or 2 weeks, you'll get caught up in this and you'll forget about this. And that's what these charts do to us. That's why you got to follow them and remember them and pay close attention to them. Because the highs here were around 463, right? 462 and some change, 463. Now, from that point, that is the highest point right now from the recovery down here. Now, it hit new lows down here since the run of the recovery and then leveling off of about 352, 353, and from that point forward, it's been rising again. If investors don't remember the fact that 538 is the highest valuation that this stock has reached, and the lowest that it has reached post split, because this is the highest it's reached post split, pre split, regardless of how you look at it. 538 is the highest valuation of this stock. Now, post split, after it split, the lowest that it reached was close to 308, and it recovered. It reached up to the 460s, and then it started leveling off, and it fell down to these new lows. So if you don't remember this past experience here and what's been going on, and you don't continue to multiply the number of the stock price by 5, you can get fogged up on whether it's at a good price point. Is it really growing? Where is it at based off of what it was pre-split to what it is now? Because the valuation of the company doesn't change. What changed was the price of the stock. So all this movement can fog up your memory. So remember, 538 is the highest valuation. The lowest is 308 after the split. And as it started rising up, 462, right? 463, 462 is the highest that it reached. And the lowest that it recently reached is close to 352. And from that point forward, it has recovered. And we're here now, closing off at 405.53. These are things as investors that we all need to remember and keep in mind. I want to go ahead and state that to all the first-time viewers and to all my viewers that always watch, my subscribers and investors, because I don't want anybody to overlook this or miss out on that information that's super important to remember. Now, here we are with what happened today. And the bulls actually maintained themselves above the 50-day moving average, and they broke through resistance and they used it as support to continue to work their way up to newer highs. So this resistance level slightly changed and they closed off at 405.53. So let's see what is important for tomorrow. So here we have our new resistance level and our new support. This is a very narrow stretch here because it started slowly rising up, leveling off, used that as support, which was close to our resistance level, and then the bulls reappeared and the bears ended it leveling off at 405.53. Now, most important thing here out of this whole entire chart as we zoomed in right now is the 50-day moving average. Reason being is because that's what lets us know what side of the chart we're in, and the bulls right now are in control, and it is 389.92. Let's see if I can land exactly on it. Keeps bouncing around, but 389.92 is the 50-day moving average. If that gets crossed, now by default it is in bearish territory and the bears are starting to gain control. As long as the bulls stay above it, they're in control, but for them to maintain control, they're going to need to break through the first resistance level that has been created here, and it's the highest point that was reached today. That is 409.39. The bulls need to break through 409.39, turn that into a support so they can start to work their way up to newer highs and new resistance levels. Very important. They can lose this momentum very quickly if the bears reappear or even if this just hangs out sideways. The bulls need to break through 409.39, turn that into a support so they can start to work their way up to newer highs and new resistance levels. Super, super important for the momentum to continue. On the other hand, we have what the bears want, and the bears want to break through support. Support is 399.20. If the bears break through 399.20, it is important to pay close attention to what's going on with the stock, but there is a room of window between 399.20 and 389.92 to see the behavior of the stock. So if support gets broken through, as an investor, I'd pay very close attention to the behavior of the stock. How quickly is it moving down? Is it getting closer to the 50-day moving average, or is it slightly hanging out around that area? And then the bulls are bringing it back up and reappearing. Because, yeah, the bears can break through it. They're still in bullish territory between support and the 50-day moving average. And if the bulls reappear, they can bring this back up. And then their goal would be to try to break through the resistance level. But support is important to always pay close attention to the behavior of the stock and what is going on and who is dominating it by putting your 1 minute, 5 minute, and 15-minute charts to see who is dominating the chart and how many candlesticks of whichever one is coming in. The inflow and the outflow as well is super important. But 50-day moving average is your best friend right now because that is the true support level to know if the bulls have lost control and the bears are gaining control, or that the bears have no control over this and the bulls will continue to dominate this. But before getting to the 50-day moving average, we have 399.20 as our first support level as a reference to know which way the stock is heading and who is starting to gain leverage. As always, if you found this video helpful and informative and it meant you well, please do so and subscribe, but don't forget to click on the bell. By clicking on the bell, you can turn on all notifications to not miss a single video that I post. Share this with your friends and community. Don't forget to hit the like button and let me know you watched this video. And at the end of this video, there's going to be a pop-up video. And in that video, I discuss about the Federal Reserve and the scheduled dates to pump the market. Now, I use the S&P 500 as a point of reference because it usually moves on those scheduled dates anywhere between 30 to 50 points. And even more I've seen on specific dates. But in the last couple ones that you'll see in that video, it's moved close to 30 to 40 points. That's good news for us as investors, because if the S&P moves up like that on those scheduled dates, that means that within those 500 companies of that index, there are companies moving several points as well. And I've come to find out, and I've been doing it for a couple weeks now and even months, that they move between 30 cents all the way upwards to $3 or even more if you land on the right stock. But I've seen them on average move 30 cents to $3 per share. I know it doesn't sound like a lot, but like I always say, profits are profits, and it's an awesome opportunity to take advantage of if the stocks are moving like that. I'm not saying that it's guaranteed that they do. That's why you have to do your research and due diligence. My best advice to go ahead and see what works best for you would be to grab the S&P 500, see how it reacted on the specific scheduled dates that I talk about in that video, and grab a specific ticker symbol within the S&P 500 and analyze if they're moving similarly on those scheduled dates so that you can go ahead as an investor, rationalize, and make a decision from there based off of your due diligence and research. Now, I'm not here to tell you guys to buy, sell, or hold. I'm just here to inform you guys and enlighten every investor and viewer on some great news that there is an opportunity to make money while the market's going up or down, as long as these scheduled dates continue to roll out and the Federal Reserve continues to pump the market. That's great news for us as investors. I know 30 cents to $3 does not sound like a lot, but per share, that adds up, and profits are profits. Hope you guys go ahead and click on the video. Don't miss out on that information so that you can maximize profits and minimize losses. And thank you guys so much for watching, and let's make some money.